In this demonstration, I will be going over I'll be going over London, Asia, and New York session, and how we could have saw opportunities in each one of those sessions. So firstly, I'm going to highlight some key PD arrays that I'll look at before I ever break down to look at what we're doing based off session liquidity. So prior to today's price action, we have this 1 day wick right here, and that's going to be an observance on how we react to that, because that's going to be something that I'll be looking at as prevalent or a key level. So to break down now from here, and just quick, simple hands of rule type of. So what I'll do is once I get my daily, I'll go down to the 4 hour and see if there's any immediate fair value gaps or order blocks that we can see. And right here, we have one that's pretty nice. So I'll mark that out. And then we'll drop to the 1 hour and do the same thing all over again. So 1 hour inside of this range right here. What do we have? We have this order block. This fair value gap, this fair value gap. Now I'll be focusing on this area more than this one, only because we already have the 4 hour here. But for completeness sake, I will be marking it because it'll act as a discount later as we see in the day. So even if we were here with it, right, I would still be looking at this 1 hour order block, and I don't know why I keep saying order block. 1 hour fair value gap and this 1 hour fair value gap. Now from here, one may go to a 15, a 5, all the way down to the 1 minute, right? That's not what I do. From here, now I'll start breaking down my sessions, my session liquidity, my CBDR, my premise. This is how I build my premise. So what I start with is settlement. Settlement is RTH 4:14 p.m. And we want to use the closing price. Oh shit, I'm tripping. That is from today's settlement price. That's not what we want. We're outlining today. So we have settlement also inside that 4 hour fair value gap. So that makes that extremely prevalent now. That is something that we want to look at on 100%. So now that I have settlement, now let's say we're in Asia, right? Let's say we're in Asia. We have settlement down here. We see what happens at 6 p.m. We open up, test the high of that 4 hour fair value gap, and then we start to climb. We displace, leave that fair value gap. Now, what does that tell me going into London, right? Now, we're still on the 1 hour chart. We're going into London, say it's 1 a.m., right? So we'll just pull that back. I'll say, okay, if we're opening near or on the open of the London session, or close, in this case, it'd be the close. If we're going to be looking for that, right? Then I want to see if London can use the high to go higher and expand. And if not, then I'll be expecting it to create a sharp displacement down to settlement, use the Asian low to continue lower, taking out some of this, rebalancing, revisiting some of these inefficiencies, possibly this wick. Now that we have everything we need on the 1 hour chart, I like to personally jump to the 5 minute. And what the 5 minute does, it's like my bellwether chart. It helps me see just enough, but not too much to get famoosed. We want to be able to discern very, very clearly, especially when we're trading all-time high scenarios, trading a London inside of an all-time high scenario that Asia created. So it's just a lot of different things to tread lightly about or to think about caution-wise. Now, we all understand that caution breeds fear, but that's not the focus here. What I mean by caution is to measure the probabilities of if this happens, then this happens. If this happens and this happens, then this happens. So what we have here, we see 12 a.m.'s price. That's something else I like to mark out. that's kind of like my first pull point. Because usually price reverses in New York, so this is usually like my first pull point. So we'll put that on the open and label that 12 a.m. And then from there, we were moving forward. And what did I outline on this premise before we got to this price action right here? I said, I would like to see if we open London near the high or the low in this scenario. If we open London near the high or the close, I want to see what we can do. If we can break above, use this to keep going higher, or if we want to break down lower. Now, at 12 a.m., something you can do or look at pre 1 a.m., which is when the London session starts, you can look at the 12 to 12:30 range. All right? So I use the 1220 low, and then I use this high, and I'll throw in some standard deviations. See, you understand how the 6-2 level is perfectly aligned on this 1 hour consequent encroachment, right? So that's something I'd be looking at. Now, you see all these levels right here. Even looking with foresight, we see that none of these levels are too prevalent. I mean, we have some reaction, but not anything crazy. So what I'll do here, and this is something I would do even before I saw that, right? So I'd say, okay, if we just opened up, these are all-time high projections right here. All of this would be an all-time high projection. So that's not what I'm trying to use, especially not for 1230's range. So what I'll do is I'll take off everything except what's prevalent to me. And right now, that's just the 6-2 level. So I'll leave on 0 and 1 just for reference on what that is. And then we have 6-2 right here. So the next step would to be grabbing the CBDR. And that range is 2 p.m. to 8 p.m. And yeah, okay. So it is right here. All right. And then for this, I will throw on standard deviations. So this is kind of how and what I like to use when I grade my, I don't think that's supposed to be there. Oh, yeah, it is. Yeah, it is. I'm tripping. That's 6-2 of CBDR. Let me change the color so we don't get confused here. So I'll change that to white. Then we'll leave 1230, and I'll just type in 12 on that. Just, it's kind of hard to see. It's whatever. I'll just remember. So moving forward, now that we have CBDR levels outlined, so what we use the CBDR for is for daily high and low projections. Now on all-time highs, what I like to do instead of using the CBDR is to use a daily chart to kind of get a good grasp on which direction we should be expanding to, especially and only in all-time high scenarios. So we want to do something like this, right? We have this order block right here. And we want to put projection levels on. So those projection levels are going to show us a bunch of different things, right? Let me also add 1.27. And then we'll be able to see this in action a little bit better. And I'll also add 1.5 just for standards. So 1.5, 1.27, 1.62. Now we go back to the 5-minute chart, and now we have our all-time high projections for what we expect price to expand to, right? Give me a second. Let me zoom back in. So we're back to London now. So now we're getting into where we have our opportune moments, right? So I'm not going to say for completeness sake, but just for simplicity reasons, I'll delete the 12 to 12:30. Oh, fuck, that was a CBDR. I'll delete the 12 to 12:30 range, and now we just have CBDR levels all-time high projection levels, and now we have session liquidity that we're focusing on. So what we see here, right, 4 a.m., we expand off of the 162 level and create this displacement. Now, what that tells me is now, and this is where the if-then statement comes in. If we open here, expand higher, we expect to use the Asia high to keep continuing. So what we would do is look for a PDA rate on that level. Now, we do have this rejection block right here. And we also have a fair value gap. Where was it? It's okay, I won't use that. This shows beautifully all we need. And I don't know if Michael's ever taught an inversion rejection block, but that's sure as fuck what it is here. And I mean, you could also just say support broken resist or resistance broken turn support, but I don't trade those philosophies or ideologies, so we will be looking for longs. So, and this is where you can incorporate time and price, right? So what are the key times for London that ICT teaches? Between 3 and 3:30. What do we see between 3 and 3:30? Let me put a line on. So between this time, right, what do we have? Expansion, displacement, small displacement, retrace. Now, this is something you could do, right? You could say, okay, well, it retraced pretty far. I don't know how low it should come. This is exactly how you do that. So you take the range and you start at the high. And you throw in your 6.2, 7.9, all that, right? Now, what do we hit? 7.05. That's perfect optimal trade entry right there. So we have that. But what that doesn't give us is the criteria for our longs, right? So what we're looking for is to use this level as inversion or to come down slightly lower and use this level as inversion. Now we see here, and I know this may be cherry picked, whatever. I looked at this live. If you want to say it's cherry picked, that's up to you. I'm just showing you how to get this done. So what we have here, we come back at, what time is that? 5:40. So now this is where you would break into a 1 minute chart. Now that we're reapproaching our level of interest, this is where you want to get into the 1 minute chart, because this is going to give you the most information. But what do you call it? Pre-macro, I like to stick to the 5 minute chart because it doesn't give too much information. So from here, we see 541, 542. We see this displacement right here. This creates the order block. And we have a beautiful run to take out these highs. Now, this is exactly what one would look for in the London session. And you may be trying to, as a neophyte, take that 3 to 3:30 window. But if you look here, this is extremely challenging for a new trader. While if you look over here, this is an extremely low resistance liquidity run. Now, for you to try to be poaching this from 3 a.m. all the way to 3:30, and you're saying, fuck, I've missed a move. You wanted to come back down all the way to the order block, or you wanted to come to the volume imbalance or the suspension block, which it does. But how many people have enough mental capacity to sit through that and be patient enough to truly grab that range? And there's not many. So that's why I stick to this criteria right here, right? This is so simple, especially if you have your ranges outlined, right? Your Asian range, your London range. This is easier. Now, there's easier days than this right here. This was a protraction that was delayed, but sometimes we can see the protraction happen as early as 2 a.m., you know? Sometimes we might see 12 to 12:30 push us upwards, and then we open back, come back down on this range, 1 to 2 a.m. That would be an optimal buy on an organic day. Now, moving forward. Now I like to, and in this case, right, you remember I told you how the CBDR can be used to project daily highs and daily lows. The reason that I took us to the daily chart to get these levels right here was because of the variety that the CBDR offers, right? There's a lot of stopping points and a lot of draws for the CBDR. So we have 127, 1382, 167, 179. Like it can just go, and then you have 152, 253. So it can just go on and on and on. So for someone who's looking for simplicity, how can you code that into your methodology to say, okay, if this happens, this is the level I look at. If this happens, this is the level I look at. It gets pretty hard, right? So what I'll do is I'll go to the daily and I'll get some stuff like this. Now the CBR levels are still valid because like the lower ones, like 2 to 3 to 162. I mean, we see how we use these levels. We use it right here. If we scroll over, and I don't have them all marked out, and I won't mark them all out just to prove a point. But we see here in make sure that's adjusted correctly. Okay, yeah, we're all good. So I'll be going back to the 5 minute now, and we'll be looking at the opportunities we had for New York session today. So New York session today was pretty sticky. I won't lie. It didn't give you much of an opportunity if you didn't get in pre 9:30 at all. Like you didn't get any chance to get back in. I mean, of course you could have just entered knowing direction, went short. One of my brothers did that today, and he made good money doing that. So I won't say it's untradeable, but it's definitely it's difficult not because of the resistance, but because of the low resistance. It went so fast, you have to already have that conviction and discernment and price action to say, okay, this is it, taking that, boom. So it's amazing, right? So now, and a few tricks I'll do, I like to throw fibs on everything just to see where we kind of are with it, right? So we get a full 1 standard deviation off of the Asian range. That's beautiful. Keep that in your notes and backtest that. Backtest what the Asian range does to the London and what the London does to the New York. So moving forward, looking at opportunities, we're thinking premise, bias, narrative, right? Premise, what happened in the last 2 to 3 days? We've been going up. We've been taking out a lot of sell-side reference points, gathering up a lot of energy to push the market up, right? To push it higher. So now that we're higher, a retail-minded perspective, right? Now let me go to RTH so I can kind of explain this a little better. So as a retail trader, for us to close down here and for us to open up here, right? A retail-minded perspective or speculation would be that this is strength, right? And then we buy off the strength. But in fact, that's not at all what happened today. I mean, obviously, anyone who trades smart money concepts or follows Michael Huddleston understands that. So what I would have been looking for this morning, right? So I like to start looking for PD arrays inside different sessions. So like from 5 to 7, I'm not looking for shit. After 7 and before 5 is where I'm looking for shit. So considering that we had such a pronounced New York session, the premise is we had little to no manipulation or sell-side delivery since the open of the session. So we just build up. And then we get really close to my daily projection level, but we reject it, right? We don't quite make it there. We fall about 3 ticks too short. So what I would do is, okay, given that we're extremely premium, I'd be looking for this rejection block. And what I'm using to frame this rejection block, okay? So I'm using the highest body and the highest wick. So this candle has the highest wick. This candle has the highest body. So boom, just like that. And then what do we see here? At 9:25, price comes up, hits the low of the rejection block, and disintegrates. This is a really good move if you were privy to it and had the conviction. I wasn't able to grab this move today because I didn't have the conviction for it. I honestly thought we would see some sort of front running on the longs just to to trigger people to chase that on a retail speculation standpoint. We didn't, so that's all right. But this is exactly what you could have used. Now, when we look at AD's pre-market model, and I'll clear all the drawings off to outline that. So what he looks at is 7 to 929 liquidity, right? So we'd be looking for something like this. Considering that we had settlement way down here at this low right here, that means we should see at least a 50% fill on this, right? That's being generous, a 50% fill. We obviously had a 100% fill, and we came off the 80% mark to retrace. And this is something I also like to do, right? So I'll take this range. Same way I took and this just happens to be the New York range. I wasn't doing that on purpose. I was just taking this displacement, right? Displacement ended once this candle made its low and came back off. Displacement started after this high was made and fell back off, right? So what I'm looking for is what level did price react to before we fell off, right? So I'll put on my shallow engagement levels. And sometimes it's not always perfect, guys. This is why Mike says try out bodies, try out wicks. So we see when we're using the wicks included, we don't get anything too precise, right? We reject right above the 424 level, right inside, kind of like the halfway point. So what I'll do is and this is just for demonstration purposes, would firstly be trying to test out the bodies first before I did some shit like this, but this is for demonstration to show you how you can look at it, right? Say it's kind of there, but it's not quite perfect. So what I like to do is, and I do this on my PD array matrix as well, or I'll have 7525, and then I'll make the 75 line my equilibrium, and then I'll have the quadrant below that and above that. So that's kind of the same idea here, right? We're looking at shallow engagement inside of the range between 424 and 0.5. And what we see here, it gets a little more precise, doesn't it? So we see, firstly, we come up, reject right in between 272, then we come up right to 1.3, then we come up right past 0.5, which I'll throw on deep engagement to see if that hit a level. Then we hit 0.5, then we reject right before we get to 382, hit 382, rejects. So that's beautiful, right? But say you don't want to get wicked out, right? Say you want to take a very, very low risk entry, right? Say you're trading a fair value gap and you see price comes up to the low of that fair value gap. You would initially be like, okay, facts, just short on this fair value gap. But the best thing to do to mitigate the risk, and sometimes you will lose the trade or miss the entry like this, but in this situation, right, we see where we hit 576. I mean, to the tick. Now, if you want it to be, low risk exposure rather, because it's not a low risk entry, but the risk exposure is lowered greatly if you enter on consequent encroachment and use the high rather than entering on the low and using the high. So we see here 618, beautiful, and then we expand, right? Now, where should we expand lower to? Say we have this range on, right? Say we have this range on. I'm going to put on negative 20% and negative 13%. Because I want to see where these levels came down to, right? So look at this. We barely reject this right here, right? And then we start to climb higher. Now, this is nothing I would want to trade, right? Even this move right here wouldn't be too favorable. I mean, think about it, right? This is where we go back to premise. What do, right? 950, we hand off to longs. We go long with high resistance all the way up until 1035. Now, at 1040, we open up and start to displace down. Now you see this isn't perfect. So for you to target this level, you wouldn't have got filled. But Mike always does say, leave a tick or two for the spread. Now our spread on futures isn't as bad. It's usually only 1 to 3 ticks, maybe 4 at the most. Most I've seen is 4 tick spread. So with that being said, you can see how sticky New York is. And this builds our premise for moving forward into tomorrow's price action, right? So what do we want to look at? And this is going to be super speculative because we still aren't finished with the CBDR yet, but I would still like to use it just to see what the levels are. So I'll throw this on, standard deviations. So where do we line up? This is the main thing I look at for these type of levels. Where do these levels line up with? And that's why I stay on the 5 minute, because the charts are a little more prevalent. Well, I'm sorry, because that is completely subjective. The charts, for me, show me a little bit less information, but give me enough to get my main points. So we have 0.5 damn near perfectly corresponding with the negative 6.7 or 6.2 level, right? That's perfect. That's exactly what I would want to look for something like this. So now for Asia, for London, for the next expansion, this is my target, right? And now we just came down here, collected all these metaphorical points. If you think back to the analogy Michael used in his last live stream, talking about the Pac-Man, right? How he eats the ghosts, how he eats the points, or the dots to get points, to be able to eat the ghosts, right? But all that to be said, we see that we accumulate a lot of buy-side liquidity. We accumulate a lot of sell stops right here, right? For buy-side delivery. Now, what do we see here? That buy-side delivery is extremely resistant, right? So we come up here, and that just shows me, okay, I want to see us come down here, right? And why do I want to see us come down here before we go up? When we think back to settlement, right? We can use settlement in any session. Settlement is either always the magnet point or the repulsion point. So I'm going to just put set. I don't feel like typing it. Okay, boom. So we have settlement. We see prices moving away from it. Now, if we keep moving away from it, what would that tell me? That would build our premise like we did yesterday, right? What have we done? We've been moving down. We're settlement. That gives you a basic bias for direction. We're a settlement, at least for the first 30 minutes of price action anyway. Boom. And that's most volatile by far. On most days, that is. So, boom. We see it start to drop. We see a small little displacement. And we see it reject off of this level right here. Now, what is this level? That's their pre-market low. So this is referring back to Aiden's model, right? At the pre-market low, pre-market high. Now, once we sweep the 7 a.m. low, then we expect a reversal in this scenario. And this is why if-then statements are important for you to start exploring, because it would have told you, if we open, right, we don't give any opportunity and we expand through ETH low. Now, imagine this candle being just this long and you just buying that and then you see some shit like this, you'd be heartbroken. So that's exactly why you want to have criteria outlined for specific things that happen. And when they don't happen, you don't trade. It's that simple. So, yeah, I'd be looking for maybe expansion in here during London session. Asia session. And that'll give London the means to expand higher, take out this high, maybe come up to the 3 mark or even the 2 mark. The 2 mark is basically perfectly aligned with this high, so that would be amazing, right? But I don't expect it to immediately reverse off that high, create relatively equal highs, do all that extra shit, right? So if I'm thinking we may pull right past it, where should we go to, right? 1.13. That's exactly where we should go to. Initially, in the sense that we are going short. Oh, I'm sorry, it's 2.23. I'm at 2.13. So we have that. Boom. I mean, look at that. It's pretty nice. How many times have you seen price wick above something and drop off and be like, man, I wonder what that draw was to? Like, maybe you've never thought about it, but now you are. But anyways, this will conclude today's video. This was the market review for October 2nd, 2025. Christmas contract for micro E-mini NASDAQ futures. I appreciate everyone's time.